with Dr. Eric Bass, good friend of mine, great friend of mine. He is the co-founder at Eye Care Advisors. We're talking cold starts. He should be coming on here any minute. Just going to wait for him to join, and I'll bring him on in. I hope everyone's doing well. It's pouring here in San Diego. It's unlike us. What's up? What's up? I'll wave back to you guys. Hopefully everyone can hear me well. Once again, we're talking with Dr. Eric Bass. He's going to be in here in a minute, and we're talking cold starts amidst everything going on, but also just in general. Hey, Matt. What's going on? You've got a great name. Eric, I could see you typing hello. I think you just got a request to join, and then we should be good. Let's just give Eric a second here, guys. Usually working from home, but I came to the office because I am losing my mind working from home. Eric, if you're having an issue joining, shoot me a text. Everyone hang tight. Got a good number of people. This is going to be a great topic. Hey. We're going to be going over how has COVID-19 changed the landscape for cold starts. Is there still opportunity out there? How can you kind of judge the amount of risk to deal with opening a cold start now? Dr. Bass, I don't see you joining, man. If you're having an issue, shoot me a text. Actually, maybe you did, and I have my notifications disabled. Okay, you requested. All right, everyone, he should be here in a second. I don't see it, Eric. I don't see that you requested. If you can try to request it again, if that's possible. Hang tight, everyone. Yeah, I see that you're here as Eye Care Advisors, Eric, but is there a button? Hold on. I'm gonna do it from my end. Hey.
All right, I think we're good.
Oh, you got nice weather there. I see reflections of clouds.
Yeah, it's the first time we've had that in quite some time here.
Yeah, we got rain. We swapped.
I don't feel bad for you. You win 95% of the year.
This is true. Well, for those of you who don't know the fantastic individual on with me here, Dr. Eric Bass, co-founder at Eye Care Advisors. I think probably one of the best groups out there, just in optometry in general, but obviously in the space of cold starts. Eric, give the folks a little bit more context as to what you're doing, who you are, all that jazz.
Sure. Well, first and foremost, appreciate you having me here today. Covalent's always put out top-notch content, and we have always been, good friends and good colleagues of yours as you have to us. I think I did our very first Google Hangout with you back in the day, probably about 5 years ago.
Yep.
And here we have progressed to Instagram Live. So I think the current pandemic has never been a clearer time of what you guys are doing for optometry, and it's awesome to see the resources, and we're just happy to be a small part of it. So as Matt mentioned, I'm Dr. Eric Bass, co-founder of Eye Care Advisors. Myself and my partner, Dr. Bob Steinmetz, we pretty much exclusively focus on cold start optometry. We typically cold start about 50 practices per year across the U.S., and we start with clients from the very beginning in terms of taking their ideas and their mission statements, help them determine the best location, negotiate the lease, secure financing, design the space, procure and secure equipment. Same thing with frame lines, teach them insurance profitability, handle human resources, branding, marketing, launch support. So effectively A to Z. We're typically with each client for probably about a year and a half from the time that they decide they want to start their own practice until 6 months after they're open for business.
Right. Yeah. Fantastic. It's quite a lot that you guys do. And, I've certainly heard of quite a few success cases. So how are things changing now with the coronavirus pandemic amongst us? Is that changing the landscape at all?
So I've spent the last 3 weeks nonstop on the phone with clients. We currently have 45 projects that are all at very different stages. So some of our clients have opened within the last 3 to 6 months, and some are literally just now still submitting applications for financing and starting to look at locations as well. And by and large, what we're seeing is the true resiliency of cold starts are really better positioned than just about anyone. We scale from zero, and so one of our big objectives in cold starting is to get people open as lean as possible. And what we're seeing is that's really paying dividends because they're very well positioned to handle the uncertainty because they don't have exorbitant expenses. They haven't overspent from the beginning, and they're still able to take advantage of a lot of the programs out there, such as the EIDL loans, the EIDL grant and loan, as well as the PPP loan, both of which Bob and myself are taking advantage of in our own practices. So we spent hundreds of hours over the last few weeks talking to attorneys and CPAs, other professionals within optometry, and reading the CARES Act and determining what the best strategy is for each client, and then have handled those on an individual basis. And so because we've gone through it ourselves, we're seeing firsthand, truly the impact of this. And, the short answer of it all is, COVID is changing the way we think about things, but thankfully it's not changing the ability for individuals to begin the cold start process. It's not changing the ability of those individuals that are already in the cold start process to continue to push forward. Even our construction projects were considered to be essential. In certain locales, we've had to have waivers filed in order to continue, but we actually have not had a single project that has been shut down completely in process. There are some processing delays taking place, but we're able to navigate those as they come along as well.
Yeah, and that's the critical part of being able to work with an advisor, right? I can't imagine trying to navigate this solo. It feels so good for your clients to probably be able to give you a ring and be like, what do I do? Because you guys have kind of seen it all. And it's
Certainly.
True, the lean start, the lean methodology that you guys use is so critical because, and I know you're not just blowing smoke, because every time we've talked in the past, I'm like, oh, do your cold starts get this piece of equipment or that cool thing? And you're like, no, bare bones, we've got to start this lean. And so, right now, obviously with the economy freezing up, essentially individuals, businesses have cash problems. And so by being lean and by keeping it bootstrapped in a sense, they don't have to suffer in that situation.
Absolutely. We always say Bob's favorite saying is cash is king, and it's truer now than ever before. And we've even had clients where, we've advised them not to get a certain piece of equipment that they really wanted. And we always help try to demonstrate what the ROI on a specific piece may or may not be. And we've even had clients come to us and say, I remember that day when you told me not to get that piece of equipment. I'm so glad that I didn't, because we're well positioned now and we're able to kind of weather the storm. And like I said, because they scale from zero, they're not having to figure out how to scale backwards. As established practices are trying to figure out what to do with employees. In many cases, a lot of these cold starts only have 1.5, maybe 2 employees. And so it's a little bit easier to manage. And for those who haven't opened their doors yet that are still in process, we firmly believe that there's going to be a significant uptick in volume demand for all of those individuals that couldn't seek eye care in March and April and May. And so those that are going to be ready to open in June, July, August, we think they're actually going to be in position 1A, because a lot of your larger established practices simply aren't going to be able to facilitate the volume, and you're going to see a lot of those individuals seeking care elsewhere. So we think that's going to be a huge value add as well. So, we always, I don't think anyone could ever catch Bob or myself in a private conversation, public conversation, or otherwise, not touting the strength and the purity and the awesomeness of starting cold. We always have. But I think these current times have really helped demonstrate better than ever that it really is a strong platform to start from, and it really puts you in a good position to succeed. And this is unprecedented what we're going through right now, and all of our cold starts are resilient and savvy, and they're sitting strong.
Right. Yeah, no, it's excellent context. And what do you, it's impossible to time, obviously, when things will get back to normal. But what about for practices what about for those watching that are like, hey, I want to open cold in 6 months, or I want to open cold in a year? What about that medium time horizon? For those who are obviously open cold, you gave us the answer there. They're lean, they'll be okay. When things open back up, there'll be demand. So they're kind of like regular, practices that have been open for some time, except they're more lean, which is a positive. But what about that intermediate term for folks that are still thinking of opening cold? Not tomorrow, obviously, but in that shorter term. What's it
So
looking like for them?
if we just look across the spectrum, you know, we've cold started over 150 practices at this point, and if we look across the spectrum, the average timeline from the point where a doc says, I want to start looking for a location and start my own practice to the day that they open their doors, on average is about 9 months. And so for those individuals, we're saying, you know, we certainly think the world may look differently coming out of this than it did going in. And, you know, habits and processes and procedures certainly may change. But in terms of the strength of a cold start to be able to establish a patient base and scale quickly, we think 9 months from now, by all means, there's not going to be, you know, a lot of hurdles at that point. We really don't think there's going to be a lot of hurdles 5 and 6 months from now, for that matter, because again, we have a demand-driven, insurance-driven profession. And what we're finding when it comes to optometrists as tenants, we have more leverage than ever, because, you know, the story I always tell is, and I've dealt with this probably on 3 separate occasions nationally, where, you know, landlords, we tell them how strong a tenant as an optometrist is. They're coming in, they're willing to sign 5-year, 7-year, 10-year term leases. They plan on being there for 20, 30 years in many cases. It's an established profession. It's driven by, you know, automated demand as it relates to insurance. And the landlord says, well, you know, I really like this concept of this cupcake shop, you know, and people are really excited about it. And you kind of want to go back and say, well, how's that cupcake shop doing right now, you know? And so what we see are, suddenly we're in like the pole position where we're the most attractive tenant possible, because for them to get retail tenants that are willing to come in to sign 7, 10-year leases doesn't exist. Restaurants aren't doing that right now, of course. And so it's given a lot of leverage on the negotiation side as well. And so I've seen terms in the last month better than I've ever seen before on the lease side, in terms of rent, the amount of money that the landlords are willing to contribute to the deal, and really just the flexibility that they're getting in the terms. And we, of course, are putting COVID riders into everything. So we're putting them in our LOIs, we're putting them in our leases. For those that we're doing, we make sure that they have a protected out. And effectively, what they're asking for is completely reasonable, to say, if my project has to hit the pause button for any COVID-related reason, then the timeline hits the pause button. So free rent pauses in place, or build out period pauses in place. And so we see on the lending side, things are taking a little longer to process, just because they're inundated with the EIDLs and the PPP loans and that sort of thing, and the loan deferments, which the vast majority of lenders, our main lender, Wells Fargo, has been more than gracious and helpful in deferring loans for 90 days for all of our clients. And so those are also we're still getting approvals. The terms are still very favorable. The interest rates have actually gone down. And so we really haven't seen any truly negative indicators to say now's a worse time than ever before to cold start a practice. If anything, now is starting to look like the best time than ever before to cold start a practice.
Oh, I love this. I want to dig into this. So just real quick, anyone who has questions, feel free to ask them. We'll pop one in here. Just wanted to say, love your social media feed. Thank you. This is like the way that this interface is. This is kind of 2 questions. I'll pop this one in here. I think it shows up. 90% of the way into opening a second specialty location. We kept it lean, but now are cash strapped. And the second part was, any recommendations? Thoughts?
You know, in terms of cash flow, the biggest things you can do right now, if you haven't already, the EIDL loan has an EIDL grant portion to it that actually affords you $10,000 up front. Effectively, no questions asked. It's actually pretty incredible how straightforward the application process is. And we actually just today heard multiple ODs that have actually received the 10K in their account. So there's been a ton of chatter of, all of us have applied for these loans, no one's received them. Are we ever going to receive them?
They're coming.
Those who applied in the second wave, there was discussion that it was actually only going to be $1,000 per employee, as opposed to a $10,000 grant up front. And we had, I think, 3 individuals already, colleagues that we've heard this morning, that received $10,000 in the bank accounts this morning, and it was earmarked as the EIDL grant. PPP, if you're opening your second location, certainly not going to apply, because you won't have payroll at this point. However, banks have been very helpful in terms of opening up additional lines of credit. The SBA loans themselves, as part of EIDL and otherwise, also have opportunities to secure more cash flow as well. And I think, you have to take some of those lifelines out. I mean, it's hard to create cash if you don't have a revenue stream from patient care taking place. And so you really have to lean on your financial institutions. I think they're really the best allies right now, and we have found that they've been very, very helpful along the way.
Yep. Okay, another question here, and feel free to guys ask them in the comments or use the question feature. What % of established practices do you foresee not being able to ever reopen?
Oh, that's like asking Anthony Fauci when I can go outside again. I certainly have no idea. I mean, every practice has such different economies taking place. They have different challenges as it relates to cash flow. One thing that I will say that we're seeing, and we certainly feel fortunate about ourselves because of the way we run our own practices and the way that we continually educate our clients to run their practices as well. Those practices that are a little bit more conservative and, do what they can if they have the ability to stockpile 2-3 months of operating cash on hand rather than just taking every last penny as income, are sitting exponentially better than those that have just been taking every dime along the way, cutting it close. I mean, we're seeing practices that, I'm convinced didn't have 3 days worth of operating expenses, in savings. And those that do, yes, this hurts. I mean, there's no question. I don't think there's a business out there other than some of those that are, specific to the pandemic itself for supplies and things like that aren't hurting tremendously. But those that ran a little bit more conservative ship and kept cash on hand are certainly doing best. And so I wouldn't venture to guess, how many can or cannot stay open. I do think that there has been significant programs put into place to help. In most cases, other than rent itself, pretty much everything's been able to be frozen in time. We've seen this with student loans, we've seen it with equipment loans, we've seen it with commercial loans, and even some of the subscription-based services have done it as well. And so you're really kind of able to freeze everything in time, but it's going to look different coming out of this for a lot of practices for sure.
Yeah, my answer to that one would be very few, I think. All right, we got
we're resilient. There's no question, and I think we're better positioned than almost any industry.
Yeah, I'm with you on that one. All right, hold on. Let me go. These are tiny text.
Yeah, they're hard to read.
And these little. All right, what is it? Did this one even? For those students who are thinking about opening their own practice at some point, I guess this got chopped off because there is no other piece of it. Chelsea, ask your question in the comments because I can't see it all, unfortunately. Okay, then you got another one here. All right, what type of educational information do you find most valuable as an end during this time? Well, we are hosting a virtual career fair in a week.
I was just going to say perfect timing.
Yeah, come to our virtual career fair. Link is in our bio, and we're not only going to have the job component, but a lot of career education that is specific to these kind of interesting times. I think that more than ever, employers are going to be looking for their new employees to be hitting the ground running with generating revenue. I'm always preaching, you can't just go into the practice and say you're going to see patients and that's it. You've got to find a way to help that practice grow and generate revenue. And that part of your interview, of your resume, all of that is going to have to really shine through more than ever. Okay, with the current situation, will most banks still require a license of at least 1 year before they approve a business loan?
Currently, yes. So our main financer for cold starts currently is Wells Fargo, and they do have a 12-month. They always have point of licensure from the time that you start working until they're willing to actually lend the funds themselves. That doesn't mean you can't apply prior to that. You just can't receive the funds until that point. Typically in our projects, however, you're not needing to receive your funds until 3-4 months or so after you've already been approved for your loan. So for most graduates that want to, cold start as quick as possible, we typically engage with them around January or February of the year following graduation. So those that are graduating this May, we can actually start to enter into the location market and start talking about financing in January, February, March of next year, and then they'll be in a position to actually start drawing their funds, in June or July of next year to stay on track from that perspective.
Got it. Back to Chelsea. For those current students who are thinking about opening their own practice at some point, preferably sooner rather than later, do you encourage them to get experience working at another practice first?
No question. And I know Chelsea personally, so I'm not surprised to see an outstanding question coming from her. And as someone who I know, she has worked in multiple private practices. And I think, that's really not only cold starting aside, that's where you meet your mentors in this profession, I think, as well. And you find those individuals that you want to emulate. And I also think at the same time, it's equally important to learn what you do like about certain practices and what you would like to implement into your own, as it is to determine what you don't like about certain practices and don't want to implement into your own. So it's a learning experience in both directions. And for all of these loans, you effectively have to have an associating position anyways. And so it's critical that, you can always find a job easier when you have a job. It's easier to navigate the process when you have income. And so we strongly encourage individuals to go out and get associating positions. If you have the ability to do it in private practice, by all means you should, because it's going to be the best training grounds for what you're planning to do in practice ownership.
Yep. I'll answer this one here. If everyone is laying off employees, why are they also applying for COVID relief? Shouldn't they be paying their employees through this time with the relief money? And well, if they are laying off employees, then they can't be applying for the SBA 7A loan. That's the whole point. I mean, you can apply for it, but you won't be forgiven the grant part of it. So
without getting too far into the weeds, I'll just answer it really quickly. So there's a lot of nuances to the loan, and the loan itself, first of all, takes a period of time to fund. And then once funded, you have to spend the funds within 8 weeks. So they're giving you 2.5 times your monthly payroll to utilize for payroll expenses, utilities, rent, and a few other things. 75% of the loan has to be utilized for payroll services. If you don't have the money in place, you don't have it to pay the employees. So what a lot of the businesses have done is they have furloughed their employees until they receive the funds. As soon as they receive the funds, they'll bring their employees back. They then have until June 30th to ramp up to 100% FTE. And once they qualify for that and spend over the course of the 8 weeks, then they actually do get the 100% loan forgiveness. So the short answer is they don't have the money yet to be able to pay those employees. The second that they do, they'll be bringing those employees back and then paying them over that 8-week spend down that is outlined by the loan.
Yeah, we got some smart people here asking about interest rates. What is the ballpark interest rate that you're currently seeing for businesses? What's the best way to leverage this pandemic stoppage to get finances in place for a cold start? So Eric, basically, the Fed funds rate just went down, which is going to affect the interest rate at which banks lend small businesses money. That's the whole point of lowering the interest rate, so that we take money and spend it into the economy. So
Definitely.
You're talking about this being the best time ever to open. It potentially is more risky, but you're getting a lower interest rate, right? Can you speak to what's going on with interest rates?
Absolutely. So we're seeing the interest rates go down. Again, I'll speak about Wells Fargo again, because they're the most supportive lender as it relates to cold starts. And their interest rates have dropped. They're finally into the 4s for the first time in a very long time. In some cases, we see upper 4s to low 5s. It's easy to try to tie them to mortgage rates. They are not one and the same, and they're not the same as acquisition rates either. And so, they're not quite as low, I think, as some people thought they quote unquote should be. But the reality is, when other rates have gone up to 6-7%, they've also continued to hold them in the 5s. And so effectively what we've seen over time is they peaked probably in the high 5s. Now they've gotten into the low 5s. We just had an approval last week. I think it was a 4.9 approval as well. We're starting to see some lower. There's a little bit more leverage. Certainly if you have a local lender for whatever reason that's willing to also lend, you can use that as leverage to try to get it down as well. So they're definitely trending in the right direction, given the fact that they're, especially given current times, still willing to loan to businesses and helping support cold starts. We certainly understand that we're not going to see interest rates in the 2s and the 3s and things like that. But the real value in these loans are they're graduated repayments, and you can pay off additional principal, actually up to 15% every single year with no penalty at all. So by the time you're said and done, you're actually going to create a significantly lower interest rate than what you're signing on for in the first place. And most are probably going to land in the 3s and 4s at that point.
Yeah, you're also going to get, think about it. It's not just your practice or, your particular loan that has lower interest rates. Technically, real estate's affected by this, other equipment companies. in theory, everything should be a little bit less expensive, or the terms and financing terms should be a little bit better. So,
Correct. And they are.
And real estate tends to be a lagging thing, right? So we're going to see, unfortunately, I'm looking out at the street here. I can't imagine how many places will close down, unfortunately, because of this. And you were saying that optometrists are seen as great tenants here. So there may be, so location, right? I go cash is king. I'm that type of guy, but I don't know much about the real estate game. So now someone might be able to get it. Both are true. So you can get real estate potentially, not maybe yet we're seeing it, but new places in theory may open as some shops and stores start to close due to this.
Absolutely. We definitely think there's going to be a lot of commercial centers that were, high visibility, high traffic areas that just didn't have vacancy because they were so optimal. And we do think that we're going to start to see some vacancies open up in those places as well. And so that's going to provide even more opportunity for the individuals that want to start a practice.
Yep. I'm just looking through these to make sure we kind of group them by topic, because I see we're starting to deviate a little bit. Okay. Do you recommend buying and building, setting up an LLC separate from the practice, or leasing office space when starting a practice cold?
The quick answer is, if you have the ability to buy and the economics work, not only for yourself personally, because you're typically going to have to come up with a down payment in that scenario, but also that the bank is willing to finance given the amount of increased debt that you're going to bring on. By all means, buying is the better play over the course of, your first 10 years. That's not always feasible if you're, looking in Southern California or Manhattan or Chicago. Oftentimes you're going to be priced out of the market right away, or the areas that you want to open don't have buildings for sale. And so ground floor retail is the most important thing as it relates to cold starts. And in many cases, those are going to be lease opportunities. I would say probably 7 or 8% of our clients end up purchasing their space and or building for their cold start. In that case, pursuant to the question, absolutely, you would set up a separate LLC, and then from there you would effectively pay yourself rent as a business.
All right, I've got a request for everyone out there. We've been lingering around 85 people. Throw us some hearts and let's see if this algorithm can get us over 100. Throw us some hearts. I want to see some hearts popping up. Or go share it with a friend. Okay. How do you calculate
I see Mo on there with a wave. What's up, Mo?
Yeah, we got some cool peeps on here. Oh, I see some hearts coming in. I want more though. How do you calculate your break-even point, especially in areas where 80 to 85% of patients are vision plans, the rest private pay? Medical credentialing is almost non-existent in Miami. That's kind of an interesting one.
Yeah, I mean, the break-even point is going to be a moving target and can be defined a little bit differently depending on, some of us consider the break-even point to be when we can start to take draws ourselves. Others consider it to be simply when, cash flow in is greater than cash flow out. I would say on average for our cold starts, we see break-even points happen between months 12 and months 18. And
Right.
Again, it's just very project specific and depends on each individual case.
Does your company perform an assessment on demographics to see if it's a good area to open a practice? I remember you've told me a lot about this stuff.
Absolutely. So we run geospatial analysis. So we're utilizing traditional census data. Who lives there? What are the ages? What are the household sizes? What are the incomes? But we're also digging deeper into the GPS components as well and looking at eye care spends, how much money per county block is being spent for eye care, eyewear, contact lenses, and contact lens services. Most importantly, we're performing a competition analysis as well. So we're determining who the competitors are, what they're doing specifically. Are they open on weekends? Are they open in the evenings? What are they offering for products? What are they offering for services? We've always said from the very beginning, competition's a good thing because it's predictable. So you do want to have some competition. If you have no competition, you don't know who's coming in next. And so you'd rather have a defined entity there and be able to capitalize on what they're not doing well to better position yourself for success. And that all comes into location as well.
Love it. Marketing strategies should a cold start look at in regards to post-COVID practice? What do you think about marketing?
I think one, letting people know you're open is the key, and letting people know that you have availability as well. And that may look like extended hours. We may see, we have a lot of our cold starts that are associating in corporate jobs, and they've either been laid off or furloughed. And so I think there's definitely an opportunity. Some of those may not be going back, to where they can offer more hours than they were doing initially. And so you definitely want to let your individuals know that. You want to let your current patient base know through your social media channels, through your patient communication platforms, that you're, fully back open for business. Ideally, you've been letting them know all along and providing updates. We're in constant contact with all of our clients with narratives that they can do for their patients for emergent and urgent care, contact lenses, making sure that their patients had enough contacts to get through, the shutdown. And so it's a lot about messaging. I think it's a lot about being proactive, being optimistic. I think if there's anything that's been truer is seeing how people, not only in the US, just the world has come together, because everyone is literally dealing with this at the same time. And I think we're going to see this camaraderie coming out of it that we've never really experienced before. And small business is going to be at the forefront of that for sure.
Yeah, I think one of the big keys, and something we're going to actually be coming out with that's going to be free for practices to use, is going to be a little marketing tool that will help you get across through email or social media the fact that your practice is following CDC like disinfection standards.
Absolutely.
So look out for that from us. Probably, I don't know, we're just backlogged with stuff, but it's coming out and it'll be something everyone can leverage to try to communicate, hey, it's safe to come here because these are the practices we follow to keep this office clean and disinfected. What's up, Dr. Boss? Hope all is well with you.
All good.
What determines an LLC versus an S Corp? Well, that's a tax election status. So it's
Bingo.
Oh, this is a good one here. In regards to business loans, how many months of operational costs can be requested as part of the loan?
So typically what we recommend is, and it depends on the size of the project, the rent amounts. For example, typically working capital is going to be set as a percentage of the total loan amount. And so again, if we go back to the Wells Fargo loan, in simplistic terms, a minimum of 30% of the loan needs to be spent on hard costs and equipment, and a maximum of 20% can be requested in working capital and or cash. However, if you have money left over in your leasehold improvement, which is also considered to be a soft cost bucket, oftentimes you can transfer that over as well. So I would say on average, the vast majority of our clients are starting somewhere in the 30,000 to 60,000 K range, depending on what their expenses are, how much their project cost, how much their build out was. We typically don't want to dip below that upon opening to make sure that you're covered long enough to where you can start to offset your operating expenses before your revenue starts to finally take over and offset those costs for you.
Just giving away everything for free now. For that person who wants
how long
to know
is this thing going on?
Yeah, I know. I got other work to do.
We'll get through the whole process.
We'll wrap it up soon. For that, what determines LLC versus S Corp for that individual? Go on Google Covalent Careers C Corporations. We did a whole article. It's like 6 pages long that outlines S Corp versus C Corp. Some stuff on LLCs, but we break down all the tax and stuff like that. And really,
I've seen that resource. That's a great resource to go to. And always still talk to your attorney and accountant. In many cases, you will actually find that the attorney and the accountant rarely agree because the most tax advantageous option is not always the most legal advantageous option, most protective, and vice versa. So you sometimes have to find the happy medium between those two, between exposure and tax liability.
By the way, you're doing a presentation at our virtual career fair. We got like a whole hour, right?
That's exactly correct.
So for those of you too who want to hear more of this in a little bit more of a structured format, go to the link in our bio and make sure you register for our free career fair in a weekish. It's on the 21st and 22nd. Leasing a space and completing a build out prior to opening. Lease is structured in a way that the rent payments don't start until the build out is finished. Do you feel it's acceptable to request a delay in rent given the current situation?
Absolutely. So again, only if ideally you want to have a rider in there that if your project stops due to COVID, so if construction cannot continue, if permitting can't be processed, let's just say you have a 3-week delay, ideally you want to stop that clock for 3 weeks. So typically we're negotiating a build out period somewhere in the 90 to 150 day range. Ideally you might have some free rent on top of that as well. But if you're 120 days in and you get a 30-day stop on your project, which again, ideally won't happen because we are considered to be essential. So it just may be a matter of going through the municipality and straightening that out. If you get a
Right.
2-week delay in there, then a 150-day build out should really become a 164-day build out, for example. So by all means, however, I mean, the landlords do have the legal edge in terms of what's already been signed if you have a signed lease, but ideally they'll be reasonable. They need you to succeed as well. If they lose you as a tenant, their odds of replacing you right now are not very good. So again, even in the midst of leases, I think we still have a good amount of leverage.
I think I need glasses. I really can't see anything anymore. I'm 32. What the hell's going on? Presbyopia is hitting
too soon.
I know. This is a question that, well, do you anticipate higher down payments required on loans due to COVID risk compared to typical? Probably not.
Currently there is no down payment, and the real estate piece has been pretty set as well. So you're looking at 0% zero money down for the cold start guys. And for those that are purchasing buildings, typically you're still looking at 10% for commercial.
I know a guy. I think the guy is this guy. Oh, wait. For the person asking, what resource did I cite for C Corp versus S Corp? Just go ahead and Google Covalent Careers. That's the name of our business and our online website. Just Google Covalent Careers C Corporations. And it's why optometry and ophthalmology practices should consider being S corporations. So you Google S corporations. We talk about C versus S versus LLC. What is the best way to increase new patient encounters in a young practice? My 2 cents, when I had no patients and was new to a private practice, I made sure that at the end of the day, I emailed every single patient with a truly personal email and asked them, please bring your family, tell your friends, and it worked well.
Absolutely. Get out there, hit the ground, show off your personality. In-house referral programs for those that send patients and family members your way after the fact. And you want to get out, spend the downtime to go out, get to know the neighboring businesses, get to know the people in the community, and let that. I saw that question came from Mo. So let them see your personality, Mo. The patients will come.
That's right. Totally agree. Everyone's got us on eye exams. Do you know any optometry startup consultants in Canada?
We do some projects in Canada. It depends on the specific project itself and which province. Obviously, they all have different rules and laws. And so we certainly would be happy to serve as a resource for you. And if we can help, we definitely will. And if we can't, we'll do what we can to set you in the right direction.
Yeah. So let's just summarize kind of what we talked about here. It sounds like that there is tremendous opportunity right now. The folks watching are probably typically younger and can withstand a little bit more risk. But through a model like what you guys put out there, being lean, taking advantage of interest rates and great real estate opportunities that are probably coming on the market, make Cold Start even more attractive than ever. But I know that you're a reasonable person, and is there anything that folks need to look out for where this could just turn upside down and not be a good thing, or is that just so low of a risk right now? You cut out. Did you hear what I said there?
I think more the latter. Yep.
Okay.
I think more the latter. I mean, I think that's kind of the whole premise of our program is we insulate ourselves from all directions to ensure that we're staying as lean as possible. No project comes without risk, of course, and no project comes without effort. And, we've always been one to say we're not trying to convince anyone ever to cold start a practice. We want motivated individuals. The clients that we work with, they're savvy, they're outgoing, they're motivated, independent of us. We just help accelerate the process, make the process easier, more cost effective for them, and help insulate a lot of the risk, from the beginning all the way through the end and into profitability and beyond. And you're right. I mean, I think our platform has kind of demonstrated the fact that the stability and the ability to withstand, the test of time and the test of pandemic at this point has definitely been telling for us. And we do think that, it's always been a good time. The best time to start a cold start has always been whenever it works for your timeline personally, is when you should dive in. But the opportunities within cold starting are more favorable than they've ever been right now, as we start to see, this bolus of patients coming down the pike on top of, more favorable lending terms, more favorable leasing terms. Everything is really kind of starting to swing in the favor of the optometrist, which is great to see.
Yeah. All right, Jen's got a question, and I like Jen, so we're gonna allow her.
All right.
Not one else though. Thought optometry is considered essential. Is a permit required for construction during this time?
So this is great question, completely specific to the municipality that you're in. So the city, the county, the state are all going to dictate ultimately what the process needs to be, as well as the extent of the build out. So typically, if you're just doing more of a cosmetic build in a second generation space where there was a business before and you're just kind of improving the aesthetics, probably not. If you're doing plumbing, if you're coring any of the concrete to add sinks, if you're doing extensive electrical work, then yes, a permit is going to be required. Again, as you're going through the permit process, even though it may be slightly delayed just because there's less hands on deck right now, as essential healthcare, we're still seeing those permit approvals go through.
That's good. Yeah, NYC for her, I believe. So might be even.
Yeah,
more
we have 2 in NYC going right now. One of them had to actually get a waiver, and they were able to receive it. So all good as far as that's concerned.
All right, everyone, go follow Eye Care Advisors on Instagram and sign up for our virtual career fair happening on April 21st and 22nd. It's free, links in the bio. Eric will be talking more there. I appreciate it, man. You gave away everything and a little bit of the kitchen sink.
There you go.
There's a lot more wisdom.
We've always been very transparent and willing to spread the word on Cold Start Optometry and help everybody out the best that we can.
Yeah, we know everyone appreciates it. And say hi to Bob. Send our regards.
Certainly.
Thanks, everyone. Appreciate y'all tuning in.
We'll see you next week. Thanks, Matt.
All right, take care.
Bye-bye.